Ahead of Budget24, Ireland is experiencing mixed economic fortunes. On the one hand, near full employment and record exchequer receipts have ensured that government has a range of policy choices. However, capacity constraints, inflation, interest rates, geopolitical instability and the climate crisis are limiting room for manoeuvre and highlighting competing policy objectives. Meanwhile, the housing challenge is also high in the agenda for government as it prepares for the budget.
We've made a number of suggestions for consideration on housing in our pre-budget submission. So these measures include the introduction of a new low VAT rate on the sale of new build, the reintroduction of mortgage interest relief to help homeowners with mortgage repayments and help deal with the rising interest rates. We're also recommending that professional landlords and the taxation of them is reformed to put them on a similar footing to trading businesses. And lastly, we're also recommending a very controlled and targeted Section 23 type relief is reintroduced again to promote investment in certain areas.
As a small, open economy, our successful tax policy has helped make us a location of choice for multinational businesses. There are a range of Budget24 measures that would help us secure continued appeal.
These measures include the widening of the tax bands, consideration of introducing a new intermediate tax rate, say 30%, and also the automatic indexation of credits and bands to help dampen the impact of inflation. We also believe that the taxation of share-based remuneration could be simplified, and we'd also recommend some improvements to the SARP regime.
As has been the case for several decades, the impact of FDI on the Irish economy can't be overstated. However, increasing changes in the international tax landscape serve to emphasise the importance of fostering the growth of the domestic sector.
So we've made a number of recommendations to support SMEs, and these include the introduction of a new 20% CGT rate, as well as some improvements to entrepreneurs relief to help promote investment in SMEs. We're also advocating for some simplification of the rules around EIIS to make it more accessible. And lastly, we're also proposing that a new lower income tax rate, say the standard rate at 20%, applies to dividends paid by SMEs that would allow them to scale without having to sell down equity.
Furthermore, to help maintain Ireland's competitive edge, incentivising innovation remains essential, as other jurisdictions refine and often improve their offering.
We believe that there are a number of measures that could be introduced to promote more innovation in the country. These include an upfront entitlement to cash refunds for businesses of a certain level. We also believe that the tax credit itself of 25% could be improved on to 35% to make it much more attractive internationally. And finally, we also believe that the rules and the application process to qualify for the R&D credit could be simplified.
Meanwhile, in the face of climate change, Ireland has ambitious climate goals that will present challenges and opportunities for individuals and businesses, with government considering a range of budgetary options.
So we believe that there are a number of tax supports that could be considered to help Ireland achieve its climate goals. These include measures to promote private finance for green investments via ESG bonds and pension funds. We also believe that there could be tax measures introduced to help accelerate the transition to electric and hybrid vehicles, as well as supporting the agri-sector in its transition to more sustainable practices.
The measures unveiled in Budget24 will have far-reaching implications for businesses across Ireland. If you have any inquiries or wish to explore further, we're here to assist.